Greetings, Dr. Jeffrey Scott here. This is my weekend market update for what will be Sunday on the East Coast already, June 11th, 2023. My email address is hgsidoc@gmail.com. I welcome all criticism, positive and negative. If you're new to my channel, either please hit the subscribe button, hit the alarm, you know when I post them. I don't keep a mailing list, so it's the only way you can find out. If you like this, hit the up thumb. If you don't, well, I guess it's okay. Hit the down thumb. At least I'll know people are watching. And again, I appreciate the comments to tell me how to do a better job. I am sitting here in Orange County, California, where I got to participate in a long-running computerized investing sort of a club. They do events on a regular basis. Annually, we do one in June. And I've really had a great time, and thank Greg Mills and Dave Larson and the rest of the team for inviting me. So, been talking markets now constantly for the last couple of days. I titled this CPI, PPI, and Fed decision on deck. Be prepared for volatility, I think is the message for this week. As always, this is for education purposes only. I'm a doctor, not a broker. I'm independent. I paid for all the tools that I use, and trading involves risk, and you alone are solely responsible for any decisions you make. It's that time again. The Wealth 365 event is coming. It is 29 days, but it's actually probably closer to 3 or 4 hours from now till we get there. But hopefully you can join us. It's been a great event to participate in. I'm not sure when I'll be speaking, as I'll be traveling on Saturday, which is my normal slot. But I will listen and attend as much as I can because I found it to be extremely useful. And I've learned so much from some of the speakers and from Rob himself. Major markets tell the story. So if you're interested, please use my link. I'll put it in the remarks section on the YouTube video. Major markets tell the story. You could see that markets were led this week, at least the major indices in yellow, by the Russell plus 1.7 and NYSE plus 1 as the markets broadened out, suggested by what we saw with the stocks last week, where we saw a lot of things besides semiconductors looking interesting. Friday was not a great day for small stocks. They were down 0.8, but they were still up 1.7. Now, interesting things. If you look at the 52 weeks since the 52-week low days since, you could see that all the major indices set their low on about October 13th. And look at the markets. Qs are up 39.4 since then, the NASDAQ 31.4. The Spider joined bull market territory up 23.5, Diamonds 18.4, NYSE 16.7. And even the laggard in the IWM was up 13.9%. I am still in the we got a recession likely coming camp. But you got to trade the market you have, not the one that some guy on YouTube says we have. And right now, I'm long the market, although I did lighten up, especially my TQQQ position, going into the news next week. Q Edge tools tell me a great story. You see this big light green line? That showed how many stocks were at the top of their Bollinger Bands on Thursday. And it was kind of like that at the highest level, on Friday. And it was like that all the way over on the right on Thursday. We are clearly coming off the overbought conditions that we had on Wednesday. And you could see stocks above the midline, the SP 1500 dropped from 81 to 77%. Although the week started strong on Friday, all the sectors were negative. 76% of the industries were negative, and 69% of the stocks were negative. So not a very strong day. You could see here all the sectors were negative, led by energy and materials. When you look here and you look at it 5 days, it tells a different story. Over the last 5 days of the market, 82% of the sectors, 69% of the industry groups, and 69% of the stocks were up. So beginning of the week was great, and as you can see, the last 2 days were kind of a little bit rough. Now, rates drifted higher this week a little bit, kind of waiting on the Feds to make a decision. I think it's going to be a pivotal decision. And you could see that as rates came down off their highs, the markets went up, and it'll be interesting to see what happens next with the rates and the market response. As I like to point out, I am still in the we probably have a recession coming camp, and I base that on the 10-2, 10-3 yield inversion, and a new term I learned today, when it gets reinversion and the yield curve goes above zero, that's when we should get the recession. This will be an interesting week with the Fed. I'll talk more about that later. Not seeing any evidence of credit tightness here. And if we look at from a economic output, if we look at the diffusion index from the Federal Reserve District 3 of Philadelphia, you can see that as economic slowdowns occur, we get a recession. When we get below minus 20, we almost always get one. Now, we didn't get the recession in 2020, and I think the reason makes sense, and the reason is because the Fed and the government threw tons of money into the market with the 2020 COVID crisis and didn't let us get into a recession. Of the current time, we did drop below 0.20, but as you can see here, we rebounded and got higher than that. Breadth better as we post as new post low highs, and you can see here the stocks above the 200, stocks above the 40-day increased, and the magic T2121, the 12-week new high, new low indicator, eased off its overbought conditions, especially into the end of the week and the market slowed down. Current buckets, as we saw with the edge tool, 77% of the stocks are above the midline. That's bullish. We're not overbought by any means by this tool. Hindenburg omens, I wouldn't expect one here, but what I am looking at is the number of new lows. And notice how the NASDAQ actually went 3 days without new lows greater than 2%. That is improvement, probably evidence of some of the market leadership expanding beyond the top 5 or 7 stocks. Unfortunately, we saw new lows of 2% on Friday. On the NYSE, again, much less new lows since March. And look at the new highs that are persisting, got up over 5% earlier in the week. So the NYSE of late looking better than the NASDAQ, which is interesting, especially when you consider that market leadership has been with the QQQ, and the leadership has been related to, just a small number, narrow number of stocks. I thought this was also interesting. No surprise with the Dow and the Russell leading the market. It's no surprise that junk led off the bottom. So the lower quality stocks that have been lagging led, and you could see that pretty much every group, EPS rank plus relative strength plus group rank, every one of the groups was positive, but the most positive was the weaker historic stocks. This is based upon fundamental data right before the market. At the end of the market on Friday, applied looking forward the response this week. We look down here, EPS rank, you did well with no earnings or good earnings. Relative strength rank, you kind of, not a big signal, but low relative strength stocks did okay. And clearly those in the lowest groups, the weakest groups to date, again, junk off the bottom. Over on the right, I thought this was fascinating. Why is it fascinating? Because look what were the worst performers. The high relative strength stocks were down 1.4%. And one of the smart groups from HDSI, strong EPS and relative strength, they're 52-week highs. Those were leaders. That's what those stocks are, and the leaders lack. Excuse me. I did pretty well in the market this week, although my holdings were underperforming my buy watch. My buy watch will rotate faster than just my holdings. Notice that the IBD 85, the weekend review, the Market Smith, which should be renamed 300 growth stocks, underperformed the S&P, and the IBD 50 did as well. Shorting candidates were negative. Well, you want them to be negative. 8 out of 10 of my shorting picks from last weekend were actually down. So it was a pretty good week for the Scott family in the picking department and on the portfolio. This is probably the most important slide of the deck, and that shows what to expect in the market. The big ones here on Tuesday, we got everything you cared about CPI. On Wednesday morning before the open, we get the PPI, but then we get Fed decision at 2 p.m. Wednesday and a Powell press conference at 2:30. Think about what the market is thinking. The market is pretty much priced in that there's not going to be an increase. I think it's 30% are expecting an increase. Second thing is, I think the market is expecting to have the Fed say something about pause, pivot, skip. So you got a very high bar for this Fed. If they raise rates and then they talk down concerns by saying we're going to pause now, I think the market may do okay, maybe even it trades up. But if they don't talk down the future as far as rates go, I think we're at risk here of seeing a sell-off. Hence, I took some profits on my QQQs. We got jobless claims on Thursday. We got some manufacturing capacity, and then we have a Fed head speaking on Friday. So keep in mind that over the past many months, if the Fed leadership wants the market to come down and they trade up on Powell's comments, that I would suspect that Waller is going to take the job of talking the market down. If the market trades down, and that was not the intention of the Fed, then I think you'll see the opposite. So the Fed heads have been sort of mitigating the comments that came out of Powell at the press conference. It's been kind of interesting, and they don't always say the same thing. So to put it mildly, we got an interesting week. Now, if you have Oracle or Adobe, two commonly held stocks, it's a big week of earnings. But for the most part, compared to where we come from, it's a quiet week. It'd also be interesting to hear from Lennar what housing is doing with the rates going up. So markets ended higher, led by diamonds and IWN, lagging, which have been lagging. Broad-based participation as the RSP outplayed the mega cap growth for a change. Maybe there was some profit taking as people started talking about rotation. Maybe that's part of why we saw the mega caps down. Upcoming week, plenty of opportunity for volatility. Markets have only a 30% chance of a rate increase. So anything except a skip of a rate and comments about rate-dependent pause will probably be a sell. The news market will be closely watching CPI, PPI, Jobless, and Powell's speech. This might be a week to take a little out in advance of the Fed decision. I sold some of my TQQQ and my IoT to raise cash in case I can buy cheaper in the weeks to come. I still have a few longs, but I'm maintaining tight stops. And I have when I look at my historic number of stocks, I'm really low on the long side. Should be another interesting week, ending with options expiration on Friday. Again, Wealth 365 event coming up. Love to have you. I'll put this link in the section on YouTube. Okay, so by the way, I've had so much fun here in this California meeting. You'll probably be seeing in the next month or two, I'll put out an announcement about a possible Florida meeting. Last year the attendance was kind of small. I'm very excited about the response, the attendance here in California. So if I have enough people interested, non-binding of course, I'll likely have a meeting in early December in Florida. So let's go take a look at the charts. I'm going to start at hot stocks and looking at ETFs because there is something here that I like a lot. And what I like a lot is right here, real estate. And I like it a lot because it would be nice to see if this is true rotation for some of those out of favor sectors like real estate to start to participate. The 686 is not meaningful to me. You can be as high as 850 from the wealth score, which is kind of my surrogate for relative strength. But the flame says it's moving up, so maybe that's a change in character. If we look at the 5-minute chart on the spiders, it's all the action was done in the first bar. We gapped up, and notice we closed right about where the gap up opened. So the market gapped, it traded higher, it traded a little bit lower, and closed right where it opened. So you know what that means. If your open and close are at a similar place, then you're going to see a doji on the daily, and we did. It's an indecision bar. The question is that going to be the beginning of an evening star and a topping pattern, or is it just a pause to refresh? And we shall see about that. Out of curiosity, on the weekly on the spider still looks strong, and we'll look more at this when we look at my weekly market timing model. If we look at the diamonds, should we look at the Q? What you see on the Qs here is a similar candle indecision. Could be a pause to refresh. It might also be a topping signal. We've had a big run, something to watch. If we look at the diamonds, diamonds had a minimally positive day on Friday. That's a 5-minute. Let's look at the chart. Here it is. It was up 0.14% on fair volume. Looks better than close than we saw in the Qs or the spiders for a while, for this week, and better than we've seen for a while, perhaps on the diamonds. And if we go to the daily on the Russell, we could see we're running right up into the anchored VWAP, which is appearing like it might want to be resistance on the moving up. If we look at volatility, this is a weekly of the VIX, and you could see that it closed near the bottom of the range. Now, on Friday, you did see a doji. So a doji at the bottom, is that the beginning of some type of a reversal setup, like a high close doji? The dojis at the top on the indices, are those beginning of a reversal candle, like a low close doji or a evening star? I think time will tell, but right now, I think the market is showing us signs that we should be at least a teeny bit concerned. The dollar looks to me to be in a trading range on a weekly. You could see it was down a little bit on the week, really just hanging out here on the 50-week, which is not that far different from the 200-day moving average. On commodities, with the dollar trading here up 0.32 on the day, if I go, you'd expect silver and gold to be down. Gold was down 0.27%, silver was down 0.13%. Oil, despite another production cut by some of the major producers, did not have much of a move. And then if you look at natural gas is still dead. And one thing that I pointed out at the meeting is if you look at where the ratio of oil to gas is, it's trading at about 10 on the price of USO to UNG. And when you look to the left here, you see the highest it usually gets is to about 5, and it often runs even less than 5. That just tells me that either natural gas is going to be coming up soon or oil's coming down. So I wouldn't be surprised to see natural gas start to move up, but you got to wait to actually see it, not because I think it's supposed to. Interesting padding here on the 10-year, and maybe I'm not surprised, and maybe it's got something to do with what's coming this week, which is going to be see, I'm the horrible drawer, but it's easier just to draw it. We're starting to wedge here. It'd be interesting to see if that's a continuation and we go higher or we go lower. But I think a lot will tell based upon the Fed response. So I think this is a binary week. I don't like binary weeks because in binary weeks, good stock picking, top-down investing, is more dependent on that binary event. So CPI, PPI, Fed, and then we'll figure out what's going to happen. If we look at my weekly market timing, because of the strong week in the diamonds and the Russell, you could see the big news here is we've now gone into buy mode across all the weekly charts, all the major sectors, index ETF, spiders, Qs, IWM, and diamonds. So I got to play the market I have. I may think this market's going to roll, but I don't know when. And right now it says it's still okay to stay long, carefully. Breadth, if we look at breadth over on Friday, there's no evidence of the TLT rising in relationships to the spiders. What does that tell me? That tells me that we're still not saying a recession over, on anytime soon. If we looked at the RSP equal weight versus the cap weight spiders, early in the week we ran up. We reverted back to form with the cap weights doing better on Friday. Same with the QQE versus the Qs. If we look at, for example, FANG versus 50 versus FANGs, we had a short pop for the 50, but FANGs are still in control. So not much change there. If we look at the hourly sectors, We're looking at ratio charts of S&P sectors versus the spider. Clear changes here, early changes. Leadership in XOC is giving up. Leadership in XOK is weakened. We still see discretionary leading. But then if we look, we see some shoots. We see perhaps something in healthcare, probably too early. We definitely see something here in materials, something here in energy, financials, industrials, and even utilities showed a little bit of move in the week. Now notice they all went back down on Friday as we reverted to large cap versus small cap. I think the market will be much healthier when we have broader participation. Now we're looking at the bull scanner section that I use. If we look at the heat map, you could see that it was a pretty mixed day. And even though for the week big cap tech lagged, the Russell lagged on Friday, and you could see big cap tech, these larger cap names, especially things like Tesla, were led to the upside. Wealth scanner, if we look at what's working right now, and I use a very short time frame on this. I eliminate daily, weekly, and monthly. I want to see what's moving right now. And what we see here is discretionary, Israel Tech, Russell, ARC, autonomous technology, robotics, small caps, spider value, transports, mid caps, home builders, 50, and then we start to drop down. Clear change, where's my semiconductors? Where's my QQQ, TQQQ? So it feels like there's rotation occurring as we talked about last week. Now, y'all probably remember, because I looked at it last week, the massive improvement in my scanner related to the development of the ability to have presets. So I'm not really changing at all what I'm doing, but the presets have allowed me to make my life and your lives much easier. So let's just take a look very quickly at some of the stocks that I'll be looking at this coming week. Keep in mind, for all the reasons I've already told you, I think it's probably a time to be cautious as we wait PPI, CPI, and the Fed decision. So if I look at Scott pullbacks and uptrends, this is my typical scan. It's got price and volume. It's got only bullish dots. It's got a reversal to the upside on the daily within 9 days, and it requires a daily and a weekly bullish bongo. I rank by dots, and this is sort of a joke. The one that comes up first, it comes up first because of the data doesn't reflect why it did this. This is having a 12-to-1 split. I've never seen a 12 or 20 or 15-to-1 reverse split be good for the stock. Typically, it keeps falling from a higher level, and I would ignore that one. I do like ROIV. This is a biotech that made my watch list, and one that we worked up a little bit here in Orange County. Here's a nice, powerful uptrend with a little snapback here. You could see it, the pullback here, then the second one, but good volume breakout momentum from the squeeze, relative strength at OB good. If I was playing the market, and right now I'm going to be cautious, I think ROIB looks good. Rumble is another one that looks interesting. It has plenty of volume. I'd have to figure out what was happening here, but it looks like we've successfully held the 200, and on Friday we had big volume with a breakout and momentum signal, relative strength in OBV. CBOE, another one, big run up, pullback, deeper pullback that I like, took both the daily and the weekly bongos, but on Friday we took out the 50, we converted both daily and weekly to green. I'd probably like to see a little bit more relative strength, but this one is looking interesting, part of a big uptrend. DoorDash, I use Uber Eats or DoorDash often for lunch. I'm on the road, I use it for dinner. It's just a junky looking chart, so it's probably not anything I'm interested in. FDMT, 4D Molecular Therapeutics, we looked at this one. Assume it's going to have very illiquid options and make it difficult to do option trades. But here's a stock that had a pretty big correction, and now it's moving up on the weekly, breaking out on the daily on pretty massive volume the last 2 days. And if you look at, I've got two kahuna forces in a row, 3 out of 4. When I see two in a row, that usually tells me it's a pretty impressive move either happening or about to happen. So FDMT was one we talked about. Honda Motor, not my typical stock. Why is it so gappy? It's because of an ADR. It's broken out. The automobile industry certainly being led by Tesla. MRNS. I don't know what Marinus Pharmaceuticals, what they make. I've never heard of them. But here's a stock that looks to me like it might be breaking out to, well, it's not all-time highs, but you have to go back to 2022, April, over a year ago to see higher highs. Something's going on with this. 2 great days in a row, two big volume days, 2 big momentum days on massive volume. I'd want to know more before I'd invest, but look at that relative strength in OBV. And then we're going to finish of the first scan with SHOP, another one we talked about extensively. It pulled back, it looks like it's ready to go again, had breakout in momentum coming out of a squeeze. So my traditional way of finding stocks that I like to buy are pullbacks and uptrends, and this scan took care of that. For those that have other interests, bottom poppers would be stocks that have sold off. It doesn't matter what your weekly bongo is, and they'd be getting ready to run. Now, not sure why TK Tankers made this list. I'll have to look because it really hasn't sold off much. I don't like the close on Friday with a shooting star, although it was up quite a bit. I just don't like where it closed. Manchester United, this is a fun story. This is a soccer team that was often played. Richmond and Ted Lasso. This just came down to support. This thing's up for sale, so it's kind of, I don't play arbitrage unless I know something. It's not arbitrage yet, but it's still looking at the sale. ONON, my wife loves the shoes. Big growth stock, high relative strength, had a beautiful run up after earnings, then pulled back, looks like it's ready to run again. Not a lot of stuff hitting here, but it had a big gap up on Friday. Anything else here that made my interest? Not really. So that, or XPOF was one that I looked at. And this again is a stock that has pulled back a lot. It had a green dot, not ready, but might be one to look for to see it break, but it's going to have the 50 overhead, which I don't love. The third group I look at is called rockets. Now, rockets require you to have, and I want to edit my rockets. I want to take out bearish dots because the bearish dots are negative. All right, so rockets require nothing. They require, just look at it. They require to have a bullish daily and weekly bongo. It doesn't look for conversion. You have to have at least 3 days, or you had to convert very recently, so you haven't had any recent pullbacks. Oh, these are bottom poppers. Oops. I wanted to look I wanted to look at rockets. So the rockets require price and volume, no bearish dots. The weekly has to be up for at least 5 weeks. Bullish and daily bongos are green. And what you see that comes to the top is something like Netflix. The problem with rockets is a lot of them are going to be not buyable. This one has a high-low jump oscillator at 98.41, not buyable, in my opinion, without a pullback. ROIV, you could buy it, but it's a higher risk buy, I should say it that way. We already looked at ROIV, we already looked at RUM. Bentley System, a software play. This was the time to buy. It showed up on my scans, I didn't follow it. But look at the nice move up. Look at my high jump bar. It's probably one I'd be afraid of buying. The cruise ships have broken out and run, pretty much all of them. And again, these are by design are going to be extended. I don't see anything sitting there saying buy me. DoorDash, Dropbox. Again, nice run here, but look at the high jump. The intent of rockets is to find stocks that are moving, but they're not all going to be actionable. I do think Shopify is actionable here. It's had a bunch of green dots over the last couple of days, certainly worth looking at. So we've looked at bottom poppers, we've looked at pullbacks and uptrends, we've looked at rockets. My mobile up scan is simple. Price and volume, and you have at least a bullish dot, and nothing else matters. So I'm just looking for momentum signals. And if we look, there's your TK. Adobe has earnings this week, so I probably wouldn't be trading it, especially if it had a shooting star. I don't know angiodynamics. It's not a bad looking chart if you want to look for a bottom fish. It had volume, breakout, and momentum, relative strength and OBV turning up. Blue Apron, we're going to forget. There's Man United, there's Netflix, there's Ray-Ban. You notice across these scans, you see some of the same stocks over and over again. Just out of curiosity, let's just look at my bear scanners. I've got to make those in here, which I haven't made yet. Notice that the leading things to the downside is weakest are volatility, staples, gold, SARC, although SARC seems to be getting better. So I don't see any major strength to the downside. Let's just run the CAT scanner against my weekend bears and see if anything has a lot of dots to the downside. That's probably, let me see how this is set up. I'm looking at bear scanners. So I need to look at, so it's giving me the same results. So I don't think that that's how I want to look at it. I probably need to come over here and let's just make a quick new scan. And that way you can see how I do it. So there we go. So a new filter. And we're going to call this bear pullbacks, or we got to call it retracements, and downtrends. If I'm shorting, I want it more expensive, so I want stocks that are greater than equal, say $25. I still want at least 500,000 shares. I don't want any bullish dots. Why would I be shorting if there's bullish tendencies? I want at least one bearish dot. So I'm looking for bearish stocks. Coming down here, I want the daily bongo to have changed in less than or equal to 9 days. But now when I go down here, we're going to be putting these into bearish bongo daily and bearish bongo weekly. And let's create the filter. And bear retracements and downtrends, and let me adjust my columns again. Let's just take a look at some of the poor performing stocks and just see if anything looks shortable here. AGX, Argan, I don't know it. Yeah, it's had a shooting star at a recent high, big reversal on the weekly and EMS, massive volume. Look at this breakdown here, but it's just above the 200, a likely place to bounce, so not my money. Chemed, this one looks interesting, a clear ISO failure at the 50. I would expect it to trade down below these prior lows, failed here at the 17. It had volume, breakdown, and momentum to the downside. Look at relative strength in OBV. It's an expensive stock. First Industry Realty, Keros Therapeutics. I'm just looking for some that I watched and saw. Let me pull up the watch list I put as shorts, and just to show you what I looked at. So these are the stocks that I looked at. Wingstop, big leader in this year. It's up 37% year to date. But look what it just did. It just broke down below the 50. It retested and failed, broke down. My target's probably $162 on this stock. It's coming out of a squeeze with volume. Bongos have flipped, as have Row Strength and OBV. Texas Roadhouse, similar pattern, failure. I don't know, those probably telling me something. Another thing, and maybe these are economically sensitive, you're not going out to eat, and maybe you're going to have to sell your storage places because you can't afford them. So here is failure in life storage, and in the same classification was EXR, extra space storage. So you've got wolf packs of failure here. Dollar General just, sold off hard. Probably would not be shorting it down here, but a run up and failure I might short. So these are just some of the ones that I looked at that I thought were potential shortable stocks. Snow, let's take a look at that. Just broke down below the 17. So I think I've done enough. I told you what I think about the market. I think the most important thing is the pending news and concerns of what risk is in this market. There are plenty of good looking stocks. There's not a lot of bearish looking stocks. Have an awesome week in the market. Please register for the Wealth 365 using my link, and I'll be sending out some dates and stuff of what I'm thinking about a Florida meeting. Have an outstanding week.